Good day, ladies and gentlemen. I hope you're well. Unfortunately, my other link wasn't working. I'm not entirely sure what went on there. Um, how many? Oh, hello, Fritz. How are you? I hope you're well. I know everybody's waiting at the other video, which is very unfortunate. I have put a link down in the description. If you guys can let everybody know that the link has changed, that would be absolutely amazing. Um, just quickly. Oh, hello, peace of my mind. I hope you are. And Robsy, oh, you're all coming over. Oh, that's brilliant. Hello, Mike Volmer. Mike, can you do me a massive favor and can you let Piper know that the link to the stream has changed and this stream is going live instead? I just couldn't get into the other live stream, which was really annoying. I think there's 21 people waiting there. Okay, awesome. Okay, so we're going to be doing we're having a very exciting live stream today. It's about Bitcoin's historical price history. It's very unfortunate everybody's waiting at everyone's waiting at the other place. I think people are starting to come over. So today we're going to deep dive into one of the things that's very, very fascinating in Bitcoin's just in Bitcoin in general. I am so sorry. I'm just reading what you guys are writing. Okay, please just let Piper know so he can redirect over here. So Bitcoin's humble beginnings started in 2009, and it has now become a multi-trillion-dollar asset. Bitcoin's price history is full of lessons, surprises, and moments of pure chaos. And today we're going to explore why Bitcoin was created, how it grew in value, major bull runs, and the catalyst behind each rise, which is very, very important. One thing that I love to do is study Bitcoin's history, study Bitcoin's chart, and also the 4-year cycles and each bull run. I love doing that. I'm such a nerd. So by the end of this stream, you'll have a clear understanding of how Bitcoin became what it is today, and maybe even an insight to where it could be going next. So if you are excited to know about Bitcoin's journey, smash the like, do comment. And let's see who's in the chat before we go any further. I think there's still some people at the other. Okay, so Fritz, how are you? Wait, that says live in 7 days. I know it does. Oh my gosh. Peace of my mind. I hope you're well. Awesome. And Rob C. Thank you for joining us. And Mike Volmer. Mr. Alex Storyteller, I don't know if you've already done it, but could you please let the Telegram and the Discord channel, Discord groups, let them know that the link has changed, which is very, very annoying. And Mark Volmer, thank you so much for telling the Piper crew. This particular live stream was going to be about Bitcoin for broke, i.e. poor people. I was one. I've done really well for myself, but there was a time where I was literally looking after the pennies. So when I do have another live stream, we will be doing one where you can actually save even if you don't have any money. There's lots and lots of tips that I'm going to be going through, and hopefully one day you all will be financially free. It's not actually as bad as it seems, because I've been through that whole process when I bought my first properties, etc. Chipper, well done. You've made it over here as well. Black Hat team, good morning and good afternoon to you as well. It is afternoon here. Bitcoin at 111. Oh my gosh. All's well, all's well. And John Legend. Oh my god, YouTube again. Bless you. Okay, and I love saying hi to Nightbot. Do pay attention to Nightbot. I do have a Telegram group, a Discord group, as well that you guys can join, and obviously the X. Butler bot at your service. Yeah. Okay, so let's get into this. I absolutely love this. I love the history of Bitcoin, and it's so unfortunate. Bitcoin is so young; it's only 16 years old, but still, we are. It's really difficult to find a Bitcoin historian. I have actually tried to look for a Bitcoin historian for my live streams, etc., but it's very difficult to get people to come on. So that's why I've started to learn all about Bitcoin, going back from the actual beginning. So why was Bitcoin created? So we all kind of have like an understanding of this. Bitcoin was created during the global financial crisis of 2008. Now, they say Satoshi Nakamoto started working on Bitcoin in, I think it was May 2008. And it was a time where banks failed, and banks were failing, governments were bailing them out, and people were losing trust in the financial system. It was an absolutely terrible time. I do remember it. The system showed that centralization control can fail, leaving ordinary people vulnerable. I do remember a little bit of the financial crisis. People were losing their jobs because of what the banks had been doing. They were giving each other massive bonuses, and they were literally on cloud nine. But as a result of their poor decision making, average Joe hurt. Houses were being repossessed. And I remember that round about that time, so many houses were being repossessed. I know my parents actually bought a couple of repossessed houses. People were committing suicide because of the economical concern, or because of the economical environment and the impact that it was having on them and their health. Mental health was on a rise. In fact, I think that's where we first started to go and look into more about mental health. Families were really, really struggling. It's really, really sad. Families were struggling. They were struggling to put food on the table. And I do remember, actually, this is going back, oh my God, so long ago. I do remember watching the news. Because back then you had to watch TV. It wasn't like you had Netflix and all these other things. You actually had to watch TV. So I was watching the news, and it was literally, there was this segment that said that the government was saying to shopkeepers and like the police force and all the rest of it, if a parent is going to steal, or they're stealing Christmas presents for their children because they cannot afford it, those people should be prosecuted. And at the time, I remember as a family, we were having discussions, and we were like, okay, so they're going to do nothing about the bankers who have got us into this crisis, but yet they're going to go after people. They're going to go after parents and families, people. If a person can't put food on the table and they are resorting to this, where is all this mess coming from? And it's actually coming from the government and the leniency that they had towards the banks, and the financial system. So Bitcoin was created by Satoshi Nakamoto. Either he was one person, or more likely he was a group of people. And Bitcoin was designed to be a peer-to-peer digital currency that didn't rely on banks or governments, etc. We can go into this, or we can literally spend days on this. Bitcoin is there's so many different parts to Bitcoin. There's people who run nodes, there's mining, there's the exchanges, there's the Bitcoin development team. There's so many different parts that actually make Bitcoin what it is. And I just don't see how one person could have done all of that. Maybe they did. But I kind of think maybe it was a group of people. And I actually go back to the cyberpunks as well, because it's pretty obvious that whoever made Bitcoin was at least associated or aware of them. So the principles of Bitcoin, obviously decentralization, no single entity controls it, which is very, very important. Scarcity, only 21 million Bitcoins will ever exist. Unfortunately, millions of them have already been lost. At least 3 to 4 million have already been lost, and they're getting lost all the time. And obviously, transparency, every transaction is recorded on the blockchain. The problem that Bitcoin solved was it was giving individuals financial sovereignty. Bearing in mind, not everybody in the world has access to the banking system and to a bank. If we're looking at poorer countries as well, it's a way to hold value independently of inflation and government manipulation. It's hard money. It's like real estate. It's like gold. It's actually something. It's nothing like fiat currency, which can be printed out of thin air. Think about it. Satoshi created something that didn't need banks, which is super cool. It didn't need trust, and it gave power back to the individuals. That's why sometimes I get a little bit annoyed when I see all of these companies coming in and all of these institutions coming in, buying up the supply of Bitcoin. But then again, Bitcoin is permissionless, so anyone can do it. But that's why Bitcoin exists. It exists for the people, and people were drawn to it even when it was nothing. And revolutions are not started with governments or at the tops or at the top. They're mainly started by ordinary people at grassroots. So that's a little bit about why Bitcoin was created. Loose on crypto, I hope you're well. Oh, okay. So it's climbing. Bitcoin's doing well. Oh, bless you, John Legend. Oh, hello, Poman. I hope you're well. Bullduck, I hope you're well. I'm just going up the. I'm so glad you guys have made it to the new link. Right, okay. So let's just talk about the Genesis block of Bitcoin. So the white paper, Bitcoin's white paper was actually published in 2008. The Genesis block was mined because with Bitcoin, like I said, there's a lot of there's a lot of things that go on with Bitcoin. I'm just changing the settings. Embedded in the message was the Times, which is a UK newspaper, the 3rd of January 2008, the Chancellor on the brink of a second bailout for banks. It's a direct reference to politics and the traditional banking system. Early adopters were mainly programmers and people who are actually into cryptography enthusiasms or all the rest of it. And we have had people on the channel. Who was it? It was NFT Demon. He's been on the channel. He actually discovered Bitcoin in 2009. He actually discovered 2009. And back then, the technology was a little bit different to what it is now. Back then, we had like paper wallets and there wasn't exchanges. It was absolutely tiny. Bitcoin's first real world transaction was for 10,000 Bitcoin for 2 pizzas the next year in 2010. That amount of Bitcoin is now worth millions of US dollars today. And every year we do celebrate Bitcoin Pizza Day every 22nd of May. Okay, let's talk about early price movement. So when Bitcoin was initially mined, there was no value to it, not very much. The only value or the cost to it was the cost of actually mining the Bitcoin, which was pennies. And it was often, you could buy Bitcoin for a fraction of a cent. However, there were no exchanges. So you had to know somebody who was either mining Bitcoin or better still, mine it yourself. So the first time Bitcoin reached $1, that was on February the 9th, 2011. That moment sparked a major psychological milestone. It was the first time Bitcoin achieved or was on par with the US dollar, signaling that the transaction from a niche experiment to something with monetary value. Before 2011, so 2009 and 2010, Bitcoin was mostly traded as fractions of a cent or a few cents. The rise to $1 was driven by an increase from early adopters, coverage on tech forums, and the launch of Mt. Gox. And we're going to be talking about Mt. Gox later on in the stream. Mt. Gox was created in, I think it was February 2021, which provided more liquidity. After hitting $1 in February 2011, Bitcoin quickly rallied to $31 by June 2011. February, March, April, May, June, within 5 months, it was up to $31. And then it had its first ever major crash. Some people do say that that was Bitcoin's first bull run, which I don't think it was. It doesn't follow the 4-year cycle. We didn't have a halving before that. Okay, if we're talking about the first bull run, that's 2013, the year of two peaks. So early 2013, Bitcoin was still in its infancy, but beginning to attract some serious attention. The ecosystem had matured, exchanges were more established, and mining was more professionalized. We had started to get actual people set up companies to mine, and we also had miners instead of just using your computer. The first wave of early adopters were pretty much people who were into this sort of stuff, revolutionary stuff like the cyberpunks, etc. After spending most of 2012 trading under $15, Bitcoin started to show real momentum. The first surge happened in the first part of January, between January and April 2013. And I'm actually going to show you, I don't know if I can do it actually. Let me just have a quick, I'll show you that later. I'm going to show you the chart, the first bull run in 2013. I think you should know about it. Now, the catalyst for the bull run was mainstream media coverage, and it began to highlight Bitcoin's potential as digital gold and a hedge against the banking system. Why? Because in Europe, we were having a crisis, another crisis, and this was the Cyprus bank crisis of March 2013. And it became a defining moment. Banks in Cyprus froze withdrawals. We've heard this before. And citizens lost their access to their savings. Bitcoin suddenly appeared as a trustless, borderless alternative to traditional finance. As fear in Europe increased, so did the demand for Bitcoin. By April, the 10th of April 2013, Bitcoin hit $166, its first parabolic bull run, a 20x from the start of the year. But it crashed soon afterwards. Within days, the market crashed from 260 down to $50 due to exchanges being overloaded, especially Mt. Gox, panic selling and profit taking. It was Bitcoin's first taste of extreme volatility on a global scale. I'm going to quickly discuss the second peak and then I'll show you the chart. The second peak, Bitcoin went from $100 all the way up to over 1,000. I think it got to 1,132 or something similar to that. But you could say $1,200, and that was in the last part I think it was Q4 of 2013. Bitcoin consolidated for a few months after the first peak. It crashed down. China entered the scene towards the end of 2013. Chinese investors exchanges, notably BTC China, poured in, treating Bitcoin as a speculative asset and a way to move money outside the traditional banking system or outside of the system. Growing coverage from major outlets like Forbes and Bloomberg introduced Bitcoin to a broader Western audience as well. By November 2013, Bitcoin broke its previous April high and surged over 1,000 US dollars for the first time. This was in November 2013. And by December, Bitcoin had reached 1,147 on Mount Gox, closing the year with a staggering 9,000% annual gain. It crashed afterwards. Later that month, the Bank of China, and this is why I say about manipulation from governments as well. The Bank of China banned financial institutions from handling Bitcoin transactions. Confidence shook. Liquidity dried up because a lot of it was from the Chinese investors. Prices collapsed back below 500 US dollars by early 2014. The market at this, and that started the first bear market, Bitcoin bear market. So I don't know if you can see this. Let me just check. Yeah, because I'm on a different screen. So this is 2013. So as we enter into 2013, up here you can see around about April we peaked. We peaked around about here you go back in April. And that was because of the Cyprus banking crisis round about here. The Cyprus banking crisis happened in March, round about here. We went up straight into April because of the panic that we had in Europe. And then from there, it came back down. And then we had the second parabolic bull run. This is when the Chinese investors came in. It was on Forbes, all the rest of it, up to here. And then obviously the China FUD hit, and then we slid down into a bear market. So that's the 2013 bull run and crash. The catalyst was media attention. Bitcoin began to appear in newspapers, online articles, attracting curious investors, especially Chinese investors. Merchant adoption. Early companies and online stores started to accept Bitcoin. We also had the Cyprus banking crisis, the panic in Europe, especially after 2008 as well, because bank accounts were frozen in 2008. People lost their houses. People were scared in 2013 that something similar can happen. Obviously, market psychology as well affected it. Early adopters did feel validated. However, after the euphoria of late 2013, when Bitcoin touched over 1,000 US dollars, the dream started to phase, and it was very, very painful. So in 2014, and it was also, I remember reading quite a lot about people saying it was a failed experiment because the price of Bitcoin fell so much. So at the opening of 2014, Bitcoin was over or just under 800 US dollars. By February 2014, Mt. Gox, the world's biggest cryptocurrency exchange at the time, collapsed. It declared bankruptcy after losing 850,000 Bitcoin. And that was worth over 450 million US dollars then. That event literally shattered trust, because for many people, Mt. Gox was Bitcoin. So the price plummeted to below 400 US dollars, and the narrative shifted from digital gold to the failed experiment. It was a failed experiment. It's now all over. Regulatory fears also began to rise. Governments worldwide started to talk about how to control and ban Bitcoin. Early developers and long-term believers, however, kept building during the crisis. All of retail basically left. Mt. Gox was a massive thing. I'm pretty sure a lot of you have heard of Mt. Gox, but let me tell you about it. So Mt. Gox is actually short for magic. gathering online exchange. It was literally a trading site for game cards. Back in 2010, a year after Bitcoin had been created, it pivoted and it became the major Bitcoin exchange. By 2013, 2 years later, it handled over 70% of all Bitcoin transactions. It literally on-ramped and onboarded most people. Its collapse in 2014, a year later, a year after 2013's bull run, and we often see a lot of projects go down to zero in 2014. The year after in the bear market was due to severe mismanagement, poor security, a massive, massive theft as well. I mean, almost 1 million Bitcoin. The exchange stored most of its coins in hot wallets, so they're always connected to the internet, and it lacked poor oversight and control, allowing hackers to take funds undetected over a period of years, actually. So when users began to struggle to withdraw money, panic set in and the platform abruptly shut down. Now, the CEO at the time had little experience in cryptography. He had little experience to no experience in cybersecurity, finance, all the rest of it. He should not have been in that position. He was actually sold Mount Gox for a very, very small amount of money. I can't remember how much it was. Anyway, some accounts were frozen as well. It worsened the crisis. It was a massive, massive crisis, and the fallout caused Bitcoin's price to crash temporarily. But at the time, it was a massive deal, and it just seemed like Bitcoin would never return. But ultimately, what it did do, it led to a stronger ecosystem, and the rise of not your keys, not your coins philosophy came from the Mt. Gox exchange collapsing. So before we go into 2015, so we've done 2013, which was the Bitcoin's first bull run. We had two peaks. We had the panic, obviously, in Europe, the Cyprus banking crisis, and then after that, the second peak was because of China and Chinese investors, and then obviously China flooded the market. China flooded the market many times. China has flooded Bitcoin like so many times. Let me just have a quick look at the chat. Oh, Alexandra G, I hope you're well. Bless you. Hello, Steve. I hope you're well. Great for you to join us. I'm glad you found the right link as well. Okay, let's talk about 2015. So we had the 2013 bull run. 2014 we had the bear market, and the largest black swan event in the bear market was the Mt. Gox collapse, and then we had the recovery year of 2015. Now Bitcoin bottomed out in 2000. Bitcoin had bottomed out, and it spent most of 2015 trading between $200 or $300 with the occasional relief rally. Public interest was at an all-time low. Remember, Mt. Gox was massive because they actually froze people's wallets, etc. I mean, people have started just to get their money back like a year ago or something. Google research for Bitcoin fell dramatically. This period was known as the crypto winter for the first time. Few investors, there was hardly anyone actually around. There was no hype, and everybody sort of left crypto unless you were part of the people who actually believed in the technology and you were here for the technology. But beneath the surface, the foundations of the next bull run were being laid. The Lightning Network, And the Segway proposals were being introduced, Bitcoin scaling solutions. So, do you remember when I was talking about the block size wars that occurred? Well, the block size wars were literally about how many transactions should there be recorded in a block. A Bitcoin block. And then we had the big blockers who wanted the block size to be expanded. And then for Bitcoin to be more of a payments network, a peer-to-peer network, like it details in Satoshi's white paper. And then we had the small blockers who thought, well, if we change it now, we're just going to continue to change it, and we should leave it as it is. And maybe it's more of a monetary solution than a payments solution. So that started in 2015 with Gavin. What's Gavin's surname? Is it Anderson? Gavin Anderson? I think he kicked it off. Gavin Anderson kicked it off. But I've done a whole live stream on that. That is fascinating. That really, really is. You guys should go back and look at that. I love it. Okay, exchanges like Coinbase and Bitstamp matured and they were rebuilding their users' trust. Infrastructure for wallets and payments and custodial services improved dramatically in 2015, the start of the block size wars as well. So that was 2015. Now 2016, the next year, so 2015, it was around about $200-300 thereabout. 2016 actually began with Bitcoin at $430. It was still very much underneath the 2013 bull run all-time high. And there were several catalysts in 2016. First and foremost, it was the second halving. The second halving occurred in July 2016. When the halving occurs, basically what happens is that the block rewards are cut in half. At the time, it was 25 Bitcoins per block mined. That was then cut to 12.5 Bitcoins for every block that was mined. That was instantly reducing the supply of Bitcoin. So what you have is you have miners, and the way that miners are incentivized to actually mine Bitcoin is because when a block is mined, what they do is they get the reward of the block. You can do mining in two different ways. You can do individual mining, i.e., you can be out there running your miner, blah, 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 hoping you'll hit a block reward. Or you can do pool mining, which nowadays is more profitable than actually just running a miner and just hoping that you'll hit a block, because there are so many miners on the network now. So we had the halving in 2016, which affected the miners. We also had global economic uncertainty. We had Brexit in 2016, Chinese capital controls. We had them to deal with, and it just reminded people why Bitcoin existed in the first place, just like it reminded people in 2013 with the Cyprus banking crisis, why Bitcoin was created in 2008/2009, the financial crisis, as well. Media began to return, and it started to call Bitcoin resilience after years of being written off. By the end of the year, Bitcoin had climbed to just under $1,000, not about $950, nearly a full recovery from the previous 2013 peak, but this time on much stronger foundations. And we will see as we go along how strong Bitcoin gets over time. 2017, the next year. So we have, again, this is why I love the 4-year cycles. We have 2016 as the halving year. Because of the halving, 2017, because of the scarcity, the So the amount of Bitcoins that are being released, that's cut in half. The amount of reward that you get for the Bitcoin, that's also cut in half. Um, because of the scarcity of the halvings, we always have the next year is always a parabolic bull run year, and 2017 was not any different. I will show you the 2017 chart. It actually surprises me so much when I sometimes talk to people and I'm like, oh, do you remember like, because 2017 is my favorite bull run. Oh, do you remember on the 2017 chart this happened or that happened? Or and they're like, well, we've never seen it. And I'm like, you haven't seen it. And like it gets worse when you go down to 2016 because people 2013 because people don't go back and what and actually look at the charts. And I think it's so fascinating. I really, really do. So 2017, Bitcoin's second bull run. The bear market ended quietly, and Bitcoin. Oops. Let me just have a quick look who's in the chat. I think some other people have joined. Oh, Chris. Hello, how are you? All good, all good. Well, thank you for joining us, and I'm glad you found the link. Um, oh, Bitcoin's on a run. Okay, awesome. Okay, let's talk about 2017. My favorite, absolute favorite bull run. I really wish I was here in 2017. So, a new phase was being fueled not just by speculation. It wasn't just the revolutionaries who were in Bitcoin this time. It was massive. Broader mainstream media recognition, massive. There was a rise of Ethereum. Now, for those people who are unaware, oh my God, do study literally Ethereum's history. It was so badly needed at the time. Right now, it's doing well. It will do well. It's not needed as it was needed back then. So Vitalik Buterin was. We all know what he looks like. He was very, very young, an absolute genius. He was working at the Bitcoin magazine. When he was working at the Bitcoin magazine, he saw for firsthand how people were struggling to scale Bitcoin. And then, obviously, you had the Lightning Network and blah, 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 and people were trying to come out and trying to scale Bitcoin, but it was absolutely impossible. The technology that he came out was with Ethereum, and Ethereum was meant to be the computer of the world. It was meant to be anyone can build on it. First time we had smart contracts and NFTs. This all came from Ethereum. People made a lot of money on Ethereum, and it wasn't one of those things that was, there was a lot of, they raised a lot of money for Ethereum. Ethereum was from an ICO, initial coin offering, and we're going to get into ICOs because they were the narrative, the top performing narrative in the 2017 bull run. There was massive retail adoption in 2017. A lot of the people who I've interviewed on my channel. So for those people who are unaware, on the channel we do three things. We do educational shorts because I absolutely love the technology behind Bitcoin. I love learning about I just love learning about it all. We also cover psychology there. We cover projects in the shorts. Is not everyone has an hour to watch a video. Then we also have a series called Crypto Stories. This is where I absolutely love doing this because we learn from people's experiences. We learn from people's experiences. Everybody loves a good story as well, and it's just a fun way of learning. It's not always by looking at charts, etc. And especially when you first enter into crypto, it is a nice way to introduce yourself to crypto, because it is difficult. It's learning about crypto, understanding crypto is very difficult. Okay, I'm not sure if I'm going to be able to finish this today simply because I've got somewhere to go. I've got a meeting in a little while. Let's cover the 2017 bull run and then we'll come back to it next week. Right, so Bitcoin this time around, it wasn't just renewed belief that Bitcoin was going to survive. It was going to thrive. The technology that was being built on Bitcoin, on blockchain, was here to stay. Bearing in mind, Web3 will be built on blockchain technology. The price action was absolutely astonishing. Really, really astonishing. Started off the year at around about $1,000 US, finished the year just under 20,000 US. Just imagine. And back then, people were buying 10 Bitcoin, they were buying 20 Bitcoin, they were buying 30 Bitcoin. We had the ICO mania, and it was absolutely unsustainable. It was unsustainable hype, which is something else that also leads into a bear market. And we saw that in 2013. We saw that in 2017. We've seen this in every single bull market. Unsustainable hype, unsustainable price surge. Throughout 2017, the cryptocurrency market was flooded with ICOs, initial coin offerings, new tokens launched on the Ethereum network, the Bitcoin network, other networks promising revolutionary projects. Now, they could quote Ethereum because Ethereum was an ICO and it went from literally something like, when it was launched, it was cents. It was under $1. You could buy Ethereum from under $1. And people saw how people became millionaires with Ethereum. So they were launching more and more ICOs. Most of these were speculative, they were unregulated, and investors were buying them simply to flip them for a profit, not for the technology behind them. And as it always starts in every market, first ICOs or the first couple of ICOs, a good amount of them were really good projects like Ethereum. Ethereum was already up and running by then. Really, really good projects. But towards the end of the bull run, some ICOs didn't even have white papers. They were literally just promises, and people were putting lots and lots of money into them. Some people that you'll hear when they talk about the 2017 bull run is you were just literally, because there was hardly any coins as well. It's not like now where we've got millions and millions of coins, millions of projects. Back then, you could literally pick out a project and it was going to do well because there wasn't that many projects. Towards the end of the bull run, the ICOs that were being offered were just literally scams. They were just promises. They were absolutely awful. But because there were success stories and hype and euphoria and all the rest of it, people were falling for them. Billions of dollars flowed into Bitcoin just to buy these ICO tokens, pushing up the prices higher. But as regulators began to crack down on them, fear spread across the market. When the ICO bubble popped, liquidity vanished and Bitcoin's momentum began to stall. Let's just have a quick look. I'm going to see if I can get out the... hold on a second. I do have a little issue because I don't have a mouse with me. I've only got my laptop. I've only got my laptop keyboard that I'm using. Right, okay. Oh gosh. Oh, yeah, I've got it here. Oh gosh, I love this. I love this chart so much. I really do hope you guys do study the previous bull runs because they are really, really good. I can't get the price to come down. 1 second. There we go. 2017. Okay, let me share my screen with you now. Yay, it's doing it. Okay, awesome. So the 2017 bull market here, we start here, 2017, and literally it just goes straight. And then we just sort of just take off vertically here. And this is how quickly it just went absolutely vertical. Yeah, so that's my favorite bull run, the 2017 bull run. And this is the type of bull run that we're following now in 2025. We're not following 2013's bull run because you had a peak in quarter 1. So I do think we're going to see something very similar to the 2017 bull run where we have a peak in quarter 4. Hopefully. Okay. Let's talk about the bear market. We'll start on the bear market and then I've got to go. I am so sorry. So 2028. So we had 2026, the halving, 2027 was the parabolic bull run. 2018 was the bear market. Bitcoin's price went vertical for the last few months of 2017, as we just saw. But in just 2 weeks, in late November to mid-December, it skyrocketed from 10,000 US dollars to almost 20,000 US dollars. And this price momentum, this price drive was purely on FOMO, fear of missing out, and which is something that a lot of people in the crypto space, including myself, suffer from. FOMO hitting, loads of people just FOMO'd in, and the price just was not sustainable. That price surge was not sustainable. And I remember when I interviewed Jason Casper, he sold pretty much at the highs of 2017, and then he went out and bought his homestead. So he did really, really well. But he had an idea in mind that this money is, I'm going to do this with it. So he got what he needed out of it. Historically, whenever Bitcoin goes parabolic, it corrects hard, and this time was no different. Retail investors piled in too late. That's what they do. They pile in too late while the early holders were taking profits. So it's about time spent in the market rather than when you get into the market most of the time. So in January 2018, governments started to tighten the rules. China banned cryptocurrency exchanges. Again, China comes in again. It bans cryptocurrency exchanges, and we'll see what it does in 2021. And it banned domestic trading. South Korea imposed regulations on anonymous trading. The USA, the SEC, came in. It warned investors about unregulated, unregistered securities and fraudulent ICOs, and suddenly the market that seemed unstoppable faced legal uncertainty, tax pressures, and fear of bans. And that there we have the 2018 bear market, which was a heavy bear market. Not only that, there were economical concerns, and the SEC was also issuing Wells notices to cryptocurrency exchanges and cryptocurrency projects. Once the price broke below certain support levels, especially the 10,000 US dollar price level for Bitcoin, fear really took over. Some retail investors who had fueled the rise began dumping to save what they had left. By the end of 2018, Bitcoin had collapsed to 3,200. That's an 84% drop from its all-time high. Many altcoins were obliterated. The 2017 bubble collapse, it wasn't just a collapse, though, it was a cleansing event. And you see these all the time. You see these after pretty much, you see them after, the next bull run as well. And we'll talk about those as well. In 2021, weak projects and scams disappeared. Developers, exchanges, and serious investors remained, focusing on infrastructure regulation and long term adoption. The correction set the foundation for the next bull run, which was 2021, this time with institutional players, clear regulations, and better technology. So, can you see from the 2023 bull run, where we had all those security concerns in the bear market of 2024, those were weeded out and addressed for the next bull run. And then in 2018, the bear market of the 2017 bull run, we did those out. We did quite a lot of those out for the 2021 bull run. So we're always making progress. I am going to end it there. It has been 50 minutes. I'll quickly just check the chat. Ayusha, welcome. I hope you're well. Oh, and John 316. I hope you're well as well. They are negatively correlated. The price of gold is going down. Maybe they're putting profits and going into the crypto market. Yes. Oh gosh, you guys are like so funny. Okay, awesome. Thank you so much for everyone who's here. I do apologize. I have no idea why I wasn't able to get into the previous stream. It has actually happened before, but I love putting up the streams beforehand. So if anybody wanted to, they could like the stream. Please do leave a comment and I will finish up the price action for Bitcoin next week. I'll summarize what we went through today and I'll add to it, and we'll see hopefully where Bitcoin is going next. Absolutely amazing having you all here. And yeah, I'll speak to most of you soon. Please do join the Telegram group, the Discord, do share and repost on X. And also I'll be talking about the Princesses Army, whose banner I forgot to put up. So with the Princesses Army, everybody's welcome to join. Mr. Alex Storyteller, Black Hat Team, Lauren, Rob, Mr. J, Mike Volmer, they've joined at the moment. Anybody else who wants to join to support the channel, you're more than welcome to join. It's just a fun way. We have our own channel in the Discord. And what we do is we just support the channel. So if anybody does want to join the Discord and let me know. And that's brilliant. Thank you so much. Oh, bless you. Okay.